Hey everybody, it's me, Gregory Mannarino. How are you today? It is Sunday, September 2nd, 2018. So, welcome to my newest segment of Markets, a Look Ahead. Now, if you've been following these little shows that I've been doing here on the weekends, these look ahead segments, I have to say, I have been calling this pretty damn right. And I'm proud to say that. There's a lot of work that goes into these markets. You all know that. All right. With that said, we're going to cover a bunch of things here. We're going to look at some charts. So what I'm going to need you to do, so we can do this together, is go to my website, traderschoice.net. You're going to watch this video right on my website. We're going to go over some charts together. There is a link in the description of this video. Click on that link, go to my website, watch this video there, and I'll see you over there. If you happen to be there already, let's get going here. I want to bring this up first before anything else, and I'm going to place a link to this article in the description of this video. Yet again, people, I hope you're sitting down for this. Another bank, BNP Paribas, the 8th largest bank by assets on the planet Earth, just got caught red-handed rigging rates. Oh, they're not the first one. Bank after bank after bank has been caught rigging everything from LIBOR to regular interest rates to gold to silver, you name it. I mean, this is incredible. But here's the joke, and the joke is on you and me. And the reason why the joke is on you and me is because nobody gives a damn. That's the truth. People almost expect to be ripped off. In fact, I think they look forward to it, honestly. So this bank, 8th largest by assets on the planet, sit down. If you're not already, like I said, got fined $90 million for being caught rigging rates. They made billions off of this, but they got fined $90 million. Explain that one to me, and explain to me why. Seriously, people are not enraged about this. It's unbelievable, and it's not going to stop. People are sheep. They just march to the slaughter. They don't give a damn. If there were an article about, I don't know, the Kardashians or something, oh, there'd be all kinds of people talking about it. But when it comes to something real like this, people are just so dumbed down. Frankly, useful freaking idiots that when they see something like this, and not you, I'm talking about the average person out there, they just, I don't know what the story is. Maybe you know. It's frankly absolutely disgusting. All right. Now let's look at some charts here. All right, I'm opening up my website. Now right below this video, we're going to start off with what we usually do. Look at this first chart, my swing trading chart. This is the S&P 500. You see SPX. Before we even mess with this chart, look below this chart. Look at this gauge here. Technical analysis for SPX. This gauge right here, if you use nothing else on this entire page, if you're trading these markets or trying to get a handle on it, use this gauge. It's been 100% right since the day I put it up here. And I hope you're taking advantage of this. Now let's look back up here, or just under this video, at SPX. What do you see right off the bat? Well, we are in a screaming uptrend, and that's the way it's been going now for the longest time. People, you know this. It's the environment of risk. It's engineered. It's fake. As long as they can keep rates suppressed, and this is what they're going to do here in the United States, the Federal Reserve, our president wants the Fed, and has said it, to not raise rates, keep their foot to the floor, although we are going to get a rate hike next month. This month, oh my God. End of this month, no doubt about it. 25 basis points to the federal funds rate. If we do not get that, markets will not like it. Why? It's already priced in my opinion. Could I be wrong? Sure. But let's see how that plays out here. So look, screaming uptrend here. There's no doubt about it. What I want you to do, real quick, look at the day trading chart here. The day trading chart is, again, for more advanced people. This is ticker SPY over there. Tracks the S&P 500. It looks kind of bullish to me right now. With that said, there is a possibility that this week could be, well, this whole month, actually, for a lot of reasons, may prove to be, if this were a real market, kind of be neutral to maybe even bearish if we look back on history. But in this environment where nothing matters except cash moving into the stock market because there's nowhere else to go, you can't go by historical norms. With that said, I did take up two positions. Two credit spreads. One against Boeing, ticker BA, and one against JP Morgan, ticker JPM. You can set up credit spreads in very safe manners. I have these set up in a very safe manner. So even if the trade goes against me pretty strongly, I can still make money here. So I would say this before we go any further. Let's be somewhat cautious here moving into next week, only because of, again, the bumps that we might get here with regard to escalating trade wars, escalating information about the crisis. I mean, this is a full-blown crisis right now, currency crisis in emerging markets. Expect a media blackout or a near media blackout. You're not going to hear about it. You're not going to see it unless you look for it. You're not going to. It's just not going to be in your face. They can't allow people to understand what's going on. They need to keep people in the box, in their box. Especially, here in the United States, people are kind of funny. They think everything is about the United States. Everything is about what our president does, and our central bank has nothing. What other world leaders are doing, what other central banks are doing, no one even knows about it, because you're kept in the box. You understand? It's mind control, and I really mean that. It's freaking mind control. Look here, don't look here, don't dream about looking anywhere in the world. Just stay in the little box right here. Follow what's going on here. American politics, it's asinine. And again, useful freaking idiots are going to be here. All right? You're not there. You're going to be looking at everything else. This is where we need to look. Okay? When they tell you to look here, don't look here. Look everywhere else. You know that. All right. With that said, before we open up some charts here, which we're going to in a second, I want you to look over here at the bond market chart. You can see we had a huge spike. They were buying up those bonds, then it kind of bled off. Okay. Let's look underneath that at the dollar bullish ETF. Dollar getting stronger, stronger, stronger. There's a compensatory mechanism. I have explained it to you for the longest time here with regard to that. The dollar strength has to be, in order for this to work, the dollar strength has to be offset with bond buying, and we are going to see more of that because I expect to see this happen. Are you ready? Okay. We are going to see cash continue to move into the dollar, or people are going to be buying dollars. Why would they be doing that? Because of the issues going on here with the currency crisis, which you're not being allowed to see over in Europe. It's the knee-jerk reaction. It's always the same. Same thing is going to happen with bonds. Knee-jerk reaction into bonds. What is that going to do? It's going to suppress rates further. Nowhere else to go. Cash flows into the stock market. You got it. It's so simple. Now, let's look at a couple of things that are going to get hurt by this mechanism. Now, swing trading chart underneath this. Let's put in ticker GLD. Enter. This, my lovely friends, paper derivative of gold. It's not real. It doesn't exist. It's not on the elemental chart. Neither is SLV. You can put that in here too. That's the paper derivative of silver. What do you notice right off the bat? A screaming downtrend now. If I am correct, and I think I'm going to be, where cash is going to move into the dollar because of the ongoing crisis here with regard to the currencies in emerging markets, gold and silver are going to suffer. The paper derivative, again, which is going to string along the actual price of the real metals, and this is a buying opportunity. You know that, I know that. This cannot be sustained indefinitely, so we're looking down the line. That's how you have to work this whole thing. That's really the truth. It's it's just incredible. It really is. Anyway, with regard to all these charts and stuff, so you can get an idea for yourself, I hope you're using these, and I hope most of all you're using that gauge right at the bottom if you're trading these markets. It's been scary, and if I didn't say it's scary accurate, it's the truth. All right, everyone, that's how I see it here. I see, in summary, the crisis here with regard to emerging market currencies and obviously their economies. The currencies are reflecting what is happening in their economies over there, to continue the knee-jerk reaction into the dollar, into our bond market, maintaining the environment of risk. With that said, with trade war talks, which don't seem to be going anywhere for the most part, honestly, especially with China, let's say, that has the potential to put some short-term pressure on this market. And again, we're getting into like a danger zone with regard to previous meltdowns in the market. But again, we've never been here before. This is a managed market. Nothing is real anymore. It's been taken over by the Fed. Other world central banks are running the show. They're doing this in concert, just like every single world leader. They're doing all of the same things at exactly the same time with regard to their own central bank. Anyway, that's the way it is in reality. And you know what you and I are going to do? We are going to reconvene when? Not tomorrow, because the market's closed tomorrow. And I have a nice day off. I'm going to lay in the pool, and I'm going to get some sun. I need some color. What do you think? That's my current plan, at least for now. But Tuesday morning, we will resume the festivities, my lovely, lovely, lovely friends. And I'll see you Tuesday morning. Have a great day.